Welcome everyone to Vested Interest. It is Thursday, July 11th. This will be the last stock pick of the day video for the week. Today we're going to take a look at one out of the consumer staple sector, Costco. You're probably aware of them. You may have a membership there. I know I do. And before we get into the video, if you could do me a favor, hit that thumbs up button down below if you find any value in the content. Make sure you are subscribed to the channel. Hit that subscribe button. Join us on this journey to financial freedom. Join the Vested Interest community and hit that notification bell so you're notified whenever we put out any new content. I do the stock pick of the day videos Monday through Thursdays whenever the market's open. I also do requests from subscribers or viewers. So if you have a stock like Costco you'd like me to cover in the stock pick of the day series, go ahead and drop it down below. And again, make sure you are subscribed and make sure you click that notification bell so if you do make a suggestion, you are notified whenever we put out that video. Now, this is the vested interest stock screener. This is how I look at a company on a high level. Thousands of stocks out there in the stock market to look at. This is a good screener that I use to kind of give me a quick view of a company and see if I'm interested in doing more of a deep dive into the financials. If it meets 5 of 8 or 6 of 9 if it's a bank or an insurance company, I add in price to book. If it meets 6 of 9 there, then I add it to my watch list and I do more of a deep dive into the company, looking at the financials, the balance sheet, the income statement, and seeing what I'm willing to pay by doing a discounted cash flow analysis. So let's jump back over to Costco. Now we are talking about Costco Wholesale. You can find more information about them at their homepage, www.costco.com. That's www.costco.com. That is their homepage where I pull this information from. Costco is a membership warehouse club dedicated to bringing our members the best possible prices on quality brand name merchandise. With more than 800 locations worldwide, Costco provides a wide selection of merchandise plus the convenience of specialty departments and exclusive membership services, all designed to make your shopping experience a pleasurable one. And that's what they are. They are a retailer. And they cover a variety of products, right? From your groceries, you can go in and get your tires done. You can buy appliances. You can buy alcohol. You can buy so much different equipment, material. I think they even have their hand. You can get online and purchase cars through them. They have a service where you can purchase trips. So they have their hands in everything. I think they do generator purchases, all that, anything you want to buy. I think even silver and gold. I think they're selling silver bars and gold bars now as well. So almost anything you can think of to buy, whether it's at one of their locations or online, they are selling it to you wholesale. You do have to be a member yearly. I think it's usually yearly memberships. We have a yearly membership, and you can also utilize their gas station for a little bit of discount on your gas if you are a member as well. I know I do. Now, the reason we're taking a look at them down 4.27% on the day, we are talking about Costco Wholesale Corporation, ticker COST, again, out of the consumer staple sector. Closed out the day at $846.59. Looks like they're up a little bit in the after hours, at least when I pulled this information. 52-week range as low as $530.56, as high as $896.67. So they are definitely closer to their 52-week high than their 52-week low. Market cap of $375.323 billion, so they are a large cap company. A beta of 0.77, so they are less volatile than the overall market, even though there was a bit of volatility today. Price to earnings ratio extremely elevated, 52.62 here, so very high price to earnings ratio. This is in line with what you'd see for a very, very fast growing tech company. I don't know if they justify this high of a PE, if they're growing that fast. Maybe they are, but that's very high PE. EPS, earnings per share, for an indicator, the overall market is around 23 to 25, depending on when you look at it. I think they might be up a little bit today. The market overall was up today. EPS sitting at $16.09 per share. Earnings date coming up September 26th. Forward dividend is $4.64 paid out on the year. They are quarterly payers, so divide by 4 there, or just wait a second and we'll look and see what they're paying per share per quarter before we wrap up the video. Very, very low starting dividend yield on this one, 0.52%. You are not buying this for the yield. You are buying this because you think it's going to continue to grow significantly in price per share. Ex-dividend date was April 25th. Looks like they paid out on May 10th here. So you would be in line for the next dividend, though you'll have to wait a little bit. Actually, they should have one coming up May. They paid out in May, so should have one coming up in August again. So you would have to wait a little over a month for the next payout. 1 year target estimate, at least according to Yahoo Finance, where I pulled this information from, $854.29 per share. So they do see some slight upside as far as price appreciation on this one. Excuse me. Next, let's jump over and look at dividend yield theory to see if this one is presenting any value. To do that, we look at their 5-year dividend yield average of 0.71%. Compare it to their current 0.52 over here where it says forward, same number, 0.52. And since it is lower, that speaks to overvaluation on this one. So at least according to dividend yield theory on this one, it is potentially overvalued. Payout ratio, very low, 26.16. I like under 75%. At 26.16%, they are very low. Plenty of room to continue growing this dividend over time. Now we're going to jump down and look at free cash flow. We want growing free cash flow, and typically if a company has growing free cash flow and they pay a dividend, they have dividends growing to match. Going back to 2021 here, you can see 5.3 billion. 2022 down to 3.5 billion, so a drop there in 2022. Back up in 2023 to 6.7 billion. Trailing 12 months, TTM, that's what that stands for, accounts for part of 2023, and what they've reported so far in 2024 shows them at 7.4 billion. So it looks like they're going to have a pretty good year, though we'll have to wait because part of this report out in the trailing 12 months is part of 2023. We'll have to wait and see what exactly the 2024 numbers shake out at. Because of this drop in 2022, I would not give them a check for growing free cash flow over the last 4 years because of that drop right there. Overall, they are growing. It does look like they're growing free cash flow over time. Just a little bit of a negative drop in 2022 takes them out of that 4-year continual cash flow growth. They are repurchasing their own shares. You can see here 496 million in 2021, 439 million in 2022. 2023 have a bit of a jump up to 676. Looks like they're continuing that trend in 2024, though again, we'll have to wait to see what the 2024 numbers shake out at because part of this trailing 12 months is 2023 numbers. Now we're going to jump over to stockanalysis.com. I am not affiliated with stockanalysis.com or Yahoo Finance, just two sources that I go to for information, and I always recommend more than one source for information so you can make sure the information you are looking at is accurate and up to date. Sometimes these companies out there presenting information takes them a while to update, and sometimes they're just wrong. Now, they have 28 analysts that have taken a look at this. They call it a consensus buy. They have a low estimate of $585, which would be a 30.92% decrease from where it currently sits. Would be a much better buy-in price in my opinion. Average estimate of $794, which would be a 6.24% increase, or I'm sorry, 6.24% decrease from where it currently sits. And if it happened to hit their high, that's the only way you'd make any money on this one as far as price appreciation. $975 estimate, which would be a 15.14% increase. All the while you could collect that, less than 1% dividend yield. Now let's jump into statistics here. I like to look at how efficiently a company is reinvesting its capital back into itself. To do that, we're going to look at return on equity and return on invested capital. I like 10% or better for these metrics. Return on equity sitting at 30.6%, 3 times what I'm looking for. And return on invested capital very high at 21.73%, again, over twice what I'm looking for there. EPS growth, earnings per share growth, is forecasted at 10.05%, which I like 5% or better, so more than double what I'm looking for there. And very nice revenue growth forecasted over the next 5 years, 7.1%. Very nice numbers overall, except for the price per share, in my opinion. Now, again, they are a quarterly payer, very low payout ratio, 28.75%. Dividend growth is very high, 13.44%, so you are getting some nice dividend growth on this one, even though you start out with a very low dividend yield. Obviously, if it was to pull back significantly, maybe you could get a little bit of higher dividend yield to pair with this dividend growth. It'd be nice if it was over 1%, but it would need to pull back significantly to get there. 19 years of growth. Buyback yield is negative. That means they are not doing a very good job efficiently buying back shares. They are potentially overpaying for them. That's what that's telling you. Shareholder yield is very low at 0.44%. They do pay out in the February, May, August, November timeframe. I like that. Now we're going to look at the dividend history over time. Back to 2022 in February, they were paying 79 cents. April 2022, they raised it up to 90 cents. May 2023, they raised it up to $1.02. You can see here they do pay special dividends from time to time. So there's a $15 per share special dividend. Awesome. That is awesome return of capital to shareholders. Last raise was in April 2024 raised it up to $1.16. So I wouldn't anticipate another raise until 2025, though you may get another special dividend. Now let's take a look at the screener here just to see where they're sitting at and wrap this one up. So you can see here, understand the business. That's where we started. Check there. Growing free cash flow. The 1 year in 2022 knocks them out of the growing free cash flow over the last 4 years. They do have a growing dividend, double digits, over 13% growth in dividends. Dividend payout ratio is under 75%. It's under 40%. Very low dividend payout ratio. Lots of room to continue to grow that dividend over time. They may continue to do that with a double-digit growth because the starting dividend yield is so low. Preferably, you'd wait for this one to pull back and try to get this one over a 1% yield to pair with that double-digit growth, but it might not pull back. Valuation based on dividend yield theory, it is potentially overvalued according to dividend yield theory. Buy below current cost basis. It is not in my portfolio, so it is not below my cost basis, and it is not even close to within 15% of a 52-week low. The return on invested capital and return on equity is over 10%, 20% for return on invested capital and over 30% for return on equity. Very high numbers there. Earnings per share growth is double digits, a little over 10%, so it beats the 5% I'm looking for. So 1, 2, 3, 4, 5. This one is on my watch list. I am waiting for a big pullback. I would love this one to drop by like 30, 40% one day and be able to, drop some cash into this one. It just always seems to be overvalued. Every time I looked at it, I was looking at this whenever it was still $500 per share and felt the same way. So maybe I'm just wrong on this one, and this one is just going to continue to grow like it's a super fast growth tech company. And I'm just going to miss out on all that growth. It is what it is. That's just the way it is sometimes. I didn't catch Meta on the big drop either because I thought the same thing. One, it didn't pay a dividend at the time. Two, I just thought it was overvalued. And sometimes companies grow faster than you think they will, and the crazy metrics that they're what looks like overpriced are just in line with their growth. And that's where you've got to figure out, what are you willing to pay for, right? Are you willing to take a chance that that growth is going to continue into the future and that the cost is justified now? Or are you going to wait for more of a pullback? Personally, I like to buy things whenever they're cheap. Even if they drop after I buy them, I can continue to buy them down. I don't like to overpay. And maybe that's why I'm going to miss out on this one's future growth, and it's the best stock in the world. Maybe that is the case. Well, let me know what you think of Costco. As always, appreciate you stopping by. If you haven't done so already, don't forget to show me some love. Hit that thumbs up, ring the notification bell. Most importantly, subscribe to the channel. Join us on this journey to financial freedom. Join the vested interest community. I do personally read and respond to the comments. I'm always interested to read your questions, opinions, or suggestions for future topics. So if you have a company like Costco you'd like me to cover in the Stock Pick of the Day series, go ahead and drop it down below, and I'll work it into the rotation. And this is Shane signing off, wishing peace and prosperity to you and yours. And remember, financial security comes to those who take a vested interest. Hey, thanks for stopping by. Thanks for tuning in. Hope you have a great week and enjoy your Friday tomorrow, and have a great weekend. We'll see you in the next one. I'm not a financial advisor. You can read the rest of this. I am just a guy on YouTube. Don't blindly copy me or anyone else that you see on YouTube. And don't pay for things on YouTube. If someone's trying to charge you for courses or to see what they're doing in their portfolio, you should avoid those people and find someone else to watch on YouTube. Don't pay for what you should be getting for free. Advertisements are the way, and that's the way YouTubers should be making their money. Or, there are other ways where they can get sponsorships by other companies. Once you get a big enough following, you can definitely make money that way. You shouldn't be making money off your viewers. At least that's my opinion. Unless you're selling merchandise. You're selling t-shirts, mugs, something like that, and they're giving you something in return. That's one thing. But someone who's not a professional selling you a course, you should avoid them. Trying to give you financial advice, you should avoid them.